Time for the market report. Grains is seeing a big rally.
Especially in wheat. We'll get into why that is. But first, the numbers. What were the week's biggest gains and losses? And then several USDA reports updating us on how livestock slaughter is going so far this year. And finally, grain prices surging. We look into the reasons why. So, markets closed, still trending up with row crop split. Let's take a look. The week's biggest gain, wheat up 33 cents, a 6% increase from the previous week. The week's biggest loss, lumber, down over $22. That's more than a 3.5% decrease from the previous week. So, several USDA reports dropped recently. These are important to update us on how things look on a national scale. We dive into livestock this week, starting with the broiler hatchery report, moving on to poultry slaughter, then this month's cattle on feed, followed by the milk production report. In the broiler hatchery report, broiler type eggs up 2% compared to last year. That comes out to be 254 million eggs. Of those, Mississippi placed 18 million. Average hatchability, 79%. Chicks placed, which is delivery from a hatchery to a poultry barn brooding area, also up 2% compared to last year. That comes out to be 196 million chicks. Of those, Mississippi placed about 14.5 million. In the poultry slaughter report, poultry certified wholesome during January this year about 4.5 billion pounds, down 3% from last year. Preliminary total live weight of inspected poultry, nearly 6 billion pounds, also down 3% from last year. Mature chickens down 4% altogether. Young chickens slaughtered averaged over 6.5 pounds per bird, up slightly from last year. Average live weight of chickens also up by 2%. In the cattle on feed report, cattle and calves on feed for the slaughter market totaled 11.5 million head, 2% lower than last year. Placements in feedlots totaled 1.75 million head, 5% down from last year. Marketings of fed cattle over 1.5 million head, 13% lower than last year. In the milk production report, last month's production about 19 billion pounds, up over 3% compared to last year. Production per cow also up by 24 pounds per cow, and number of milk cows compared to last year up by 200,000 head. Annual production of milk for 2025, 232 billion pounds, up over 2.5%. Continuing on livestock, Dr. Josh Maples, Extension Ag economist, recently gave his thoughts on how cattle prices are shaping up so far this year. Early we know, but it seems things are going well. He said, quote, "Cattle prices have pushed higher during the first few months of 2026. 5-weight steer average prices in Mississippi, Arkansas, and Kentucky all topped $450 per hundredweight last week. The weekly 5-market average for fed steers was $246.91. These are each record high prices and sharply above year-ago levels. Cull cow and bull prices are also at or near record highs." Moving into our report, as you saw in our market update, grain prices on the rise. What's the cause of this current rally? Geopolitical instability, specifically with Iran and the continuing Ukraine war. Analyst Shawn Hackett also gives us a heads up on what weather looks like this year.
Throughout history, wheat has always been most sensitive to geopolitical instability. And this whole situation with Iran, are they going to close the Strait of Hormuz? And we're continuing to get conflicting signals with Russia, Ukraine. Peace, they're just not moving in the right direction for peace. And I think we are starting to put geopolitical, the way I'm looking at it, we have really, really good weather in Brazil for the second crop corn, not exciting the market. We have an aggressive cash market selling domestically for farmers needing to raise capital, as they typically do in mid-late February. And even though geopolitics are exciting for wheat, it's not really the same story for corn, and so it's just the odd man left out. It doesn't have a good story yet to drive it like soybeans do and like wheat does. And this is the time of the year where we're trying to calibrate what kind of total production is Argentina and second crop corn going to deliver. Right now, the weather's been pretty darn good, not a lot of heat, decent moisture. It looks like the crops are going to be on the higher side, and it's just not going to give the corn market a reason to outperform either wheat or soybeans at this point. We're at the weather point for spring, and that means the weather point for winter wheat. And we've been dealing with a lot of cold weather, which we think is going to continue to be a theme of some flash frost risks for U.S. winter wheat here during the spring. If I'm looking for a weather catalyst, I think winter wheat's the one that could continue to provide that type of story. The IRI comes out every month and they tell you what they believe their probabilities are for El Nino, La Nina. Right now, La Nina has just ended and we're moving towards an El Nino later in the year. The projections based on statistical and dynamical models, there's a 60% chance we're gonna have El Nino by July. That usually means cooler weather and timely rains like we saw in 2023. That would mean good crops. Price momentum going into the spring needs to be taken full advantage of given El Nino expected weather pattern. I think you're going to have to take that shot before the growing season because of that.
And that's it for a deeper look into the markets. Seems a lot of factors moving the needle these days. We'll see how that continues.